Hey guys, this is Julie, Trading Strategies. Good afternoon. Earn2Trade has a new month and a new special offer. This would be for the Trader's Career Path 50, which is a great opportunity, 40% off to start your funding chance to get a live account with Earn2Trade. I'm personally going through my own um, challenge at the moment. I'm doing a Gauntlet mini, and for 200,000, I'm going to go through a couple of the issues that I've faced in the past with my prior challenges, um, and my successes in overcoming those issues to reach funded trader status with Earn2Trade. So we'll talk about that in this video. Um, when you start out, you realize that there's some rules that you need to adhere to. Following a progression ladder, don't dip below the daily loss or their minimum account balance of the end of day drawdown. But there's also a maintain consistency rule that you have to adhere to, and this one is where you don't want to go below or above, excuse me, don't want to go above 30% of your profit target. Um, so if your profit target is 11,000, you can't trade in any one session above 3,300, right? That's 30% of 11,000. So in any one trade session, if you can keep it below 3,300, you're in good shape. Um, and you need to trade 15 days and trade the progression ladder. So how many contracts do you get? It depends on how far you've reached your profit goals. Right now, I'm above 5,000, so I would potentially have up to 16 contracts at my disposal to use at any one time. And the end of day drawdown is what usually will zap me because I'm trading with a large position size. It's very easy to get down to this um, level that is self-adjusting. So it will adjust. My end of day drawdown is 6,000. So they started with 200,000 account minus 6,000 is 194. So then it would rise as my account balance rise. My balance has risen to 5238, so I'm almost at the 6,000. Once I hit the 6,000 in profit target, my end of day drawdown stops, right? It doesn't trail anymore, it's fixed. So I will have a minimum account balance of 200, 6,000 at that point. And at $206,000, it stops trailing, it stays fixed, and then I try to go higher um, to get my 11,000, but I can't go below 2,000 or I'll wipe out or touch it. It's my put line. I can't, get near it. So now I'm going from 6,000 to 11 to complete the combine. I just want to keep going higher and higher um, to get to my goal. And so you just trade during the approved times, which is you have to close your trades before the end of the trade session at 4 p.m. Central, and then you can reopen them when the market opens after that maintenance period. But you do have to close your trades every day before the end of the day. And that's it. Follow the progression ladder. So now that I'm above 5,000 or 4,500, I can deploy up to 16 contracts. So that means that I could be trading crude and NQ and ES all together with a couple of contracts each and not worry about it, right? I just have to keep my eye on that drawdown. I want to only go, in a certain distance at a certain time. So I've put together a tick table I wanted to show you. And when I measure my ranges, I'll know how many points that I want to get to during any one trade session. And so I can measure a custom range. I'll know how many points are available in a daily session, in a Globex session, the RTH session on an average, right? So I can get my benchmark. Then I can look over here to see, is the volatility, the range expanding or contracting? If it's expanding, then they're reaching up and for the outer targets, right? If it's contracting, it might drift like it is here, but much tinier, tiny, 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 right? Drift down, down, down. So it's just a low drift. You don't, you're using a much smaller range right here. See, these are just tiny, tiny, tiny ranges for each bar. So if you know how many points you're looking for in the, you know, 2/3 of your 15-minute custom range, oops, just had that on there. Let's see. There at 34. See, there it is, 33, close enough. So you can put this on your bar, each one, and you can see that it's right there, right? It hits the line. So you're trying to get 2/3 of that range, right? So you can come in and know what to expect each bar to reach on average, right? You're trying to give yourself a target to hit. You don't need to hit the high or the low tick. You need to get inside that range and hit a target to make money. So give yourself a range, to reach. Know if your volatility is going up or down. Follow a few simple trend filters and, come up with a trade plan to try to reach your targets. Most of the volatility this past month has been, in the past year, really, since 23, has been short vol. And short vol is range contraction, and it's usually coming back inside um, the range, small ranges where it doesn't go very far, but it'll come back. So it goes up and down. Trade inside this really, really small range. And it's very difficult uh, when you have a nice range expansion day, like right here. You can see the range is going up, 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 up. That's when you can really make some money in the market because you can expect that range to expand and you know how much to reach for, right? Or how much is left, or have a target to trade to. Um, it's much easier than when the range is contracting and coming down and coming back to the averages because you just get chopped up. You can get chopped up. So you have to be very careful in low volatility generally, and then especially if it's contracting. In fact, you might just want to, limit your trading to days when the volatility is rising, for instance, so that you have a cleaner shot at trying to reach a goal or reach a profit target. And I've got the ability to, tell myself where, those targets can be obtainable because that's how we're going to get funded and that's how we're going to be successful going forward is measuring the range, having, either a support resistance level to bounce off of and capture it, or a support resistance level to trade to and take the profits, and or the range distance inside that support resistance level that we're trying to get to. So if you're trying to trade off of like a weekly one going out or a VWAP or, a moving average, you can get a good idea of how many points are going to be available for you. And my tick chart, so for the 1675, even in the low volatility, doesn't mean that you have to, not take those points. The points are there. You just have to realize that they're much smaller ranges and try to put yourself in a position dynamically to adjust whether the range is expanding or contracting, and to go for the lower hanging fruit targets and add them up, right? They add up. you know each one of these bars, right, was $67 for one tick, one 67 points, $335 um, for the range per bar. 335 per bar on the range. Spit it out. So you just got to go inside and grab it. See what I mean, Jelly Bean? So, or just like I say, wait to get a better opportunity and a higher range, 33, 33.50. Much easier to navigate in and out of. Put a couple of contracts on that, and then you can see that you can start making some good money per bar. You have an idea of where that range is going to go. And this works for all time frames. I mean, these are just 15-minute bars. You can do the same thing for 30-minute bars and 60-minute bars, 5-minute bars. I mean, you're just taking the dynamic range and putting it on a time frame and trading that range. Basically, once you get a directional idea, and then an idea of whether the volatility is going long or short. So, definitely think about getting the gauntlet going for the trader career path, or choose a gauntlet mini like I have, and try to get the JATS PT indicator to help you measure what these ranges are going to be. It works on all instruments. Crude works the same. I can put together a crude template and measure these ranges for crude, because their opening ranges are a little bit different than equities. They have an 8 to 9. There's my crude points, instead of 8:30 to 9:30, but it's basically the same. I can tell you what the daily range is, the Globex, the Asia session, London, RTH, and then these lower um, opening ranges, how many points or ticks in this instance. There's not points. There's actually, that's like $1.15 for a full um, 1 hour IB for Friday. So you could have expected a 281, daily range, and then see where you are, when that range is reached, or inside of a RTH period. If you're trying to get to your low hanging fruit in the RTH session, you can look to see where that higher low is from that 65 cent, you know, first level, or $1.30. Try to get to the 68% of that range. So you can be trading to your targets inside the range in crude, just like you can with the and let's take a look at Friday crude just to give you an example. It was interesting. It got stuck at some weekly twos. It was really oversold, and then it came back inside the range. Where is my crude chart? Hang on 1 second. Here we go. So we had gotten way oversold, way past the weekly 3, and it spiked down way low, came back in to the weekly 2 and 3, and then hung out on the daily 3. I don't know if you can see that red line right here, daily 3. So you had a very small, truncated um, market Friday compared to what the ranges used to be. So it was inside this very tiny range for the RTH session. Where did the 8 o'clock candle open? Right there. Yep. So $1.78 in the RTH. So that was the full range, $1.82. So it was right there. I mean, it met the RTH range pretty much on point. In fact, it got there. $1.78 target reached. It was $1.82. Um, target reached, and they just stayed inside that range. Pretty cool. So for the 1 hour, IB 115, and it pretty much stayed inside this 86 cent range. So right here, 82. So you can see right here that it definitely stayed inside that first standard deviation of the 1 hour IB, 82 cents. It traded inside that 68% range right there. All right, so 15-minute range, 21 cents and 42 cents. So let me put this on a 15-minute bar, and we'll just take our little theory for a test here. 42.59, 21, 42.59. So your 8 o'clock bar was your biggest bar. Right there, 89. And it said 59, so we well exceeded that range. And it was more or less a 42 cent range. Look at that. Target reached right there. Do you see that? Target reached right there. One, two, three. All of them target reached from the open. So there was one, two, three PT2s right off the bat. So you would have had the ability to get 42 cents 3 times right off the open, and it would have made it 4 times before it rolled over. So that's 420 times 4 with one contract. 1680. Not bad. One contract. All right. So it works the same on all instruments. You could do gold, you could do currencies. So get the JATS PT indicator, put it on the market of your choice, have the ability to see whether the range is expanding or contracting, and what your opportunities are to take profits out of the market. And then, I use you know, the standard deviation of the range for the risk, you know, and profit target as a general rule, unless it's very low volatility, and then you just want to stay with the ones. And if it's very high volatility, you can, move up to the threes and, trade each bar by bar, on a pretty successful basis, staying within your range as a general rule of thumb. Once you get accustomed to identifying, whether you want to trade a range strategy with support resistance, or do you want to trade a trend strategy, reaching for outer targets. And you could expand your target and trade to a 60-minute range or an RTH range if you have the budget to do that. It all works the same, very fractal. Um, Let me know if you have any questions, and definitely go by the Earn2Trade, and I will keep you apprised of my progress for each of the algos that I get funded through Earn2Trade. I'll have different strategies going. Thank you so much. Y'all have a great day.